So everybody is celebrating that the world's largest company just did a $110 billion stock buyback, and Apple stock just increased by over 10% today. But today I'm going to be telling the story, the untold story of why Apple is actively losing tens of billions of dollars every single year, and absolutely nobody is talking about it. So to begin to unravel this mystery, let's have a look at the recent news that came out today. Apple stock has had its best day since 2022. It beat its earnings, and we can see here that it is doing a $110 billion stock buyback. Okay, we can see here Apple shares have popped after the company reported a better than expected second quarter earnings and the largest ever stock buyback program. We can see, if we have a look at the chart of Apple, we can actually see that it has reacted very positively to the news today. Have a look at how big the stock price has jumped just today. It had a massive big gap. That's how much it increased. We can see a massive gap in the price of Apple. But let's begin to actually uncover why Apple is actually losing a lot of money, okay? So let's first talk about everything that most people are familiar with, okay? Apple is one of the most dominant companies in the world. We can see here that Apple's market capitalization is larger than the combined GDP of 110 different countries. Have a look at how bananas this is. And this is actually an old chart, believe it or not. This chart is showing that Apple's total market cap is 2,062 billion, which is 2.062 trillion. Apple's market cap right now is a lot bigger than that. So again, if we have a look at some different charts that kind of put things into perspective, we can see that Apple is by far a giant, okay? When you have a look at the amount of cash on Apple's balance sheet, it dwarfs the cash of all different companies. And everybody thinks, oh, Apple just has to be this very, very, very successful company. Well, they're not, as we're about to have a look at in a moment. And we're going to explain why they might be forced to make a move that most people aren't expecting. But we can see here, Twitter has got $13 billion in cash. Snapchat, $25 billion. Sony, $43 billion. Uber, one of the best companies in the world. I was just in an Uber about 12 minutes ago. I scrambled. I jumped out of the Uber. I was a little bit late to do this live stream for you guys today. Uber only has $68 billion of capital on the balance sheet. Apple has got $250 billion, judging by this chart. Okay, there's lots of different estimates showing how much cash Apple has on its balance sheet, and having a look at how much cash Apple has on its balance sheet will be pivotal to kind of explain why Apple is actually losing so much money every single year, okay? So let's have a look at this chart here. We can see that this is the amount of cash on Apple's balance sheet and how quickly it's grown over the years. Have a look at how small it was in 2008. I actually put some color on how small it was in this little tweet that I popped out just before going live today, okay? We can see that Apple's failure began in 2008 as they took their cash balance from $15 billion, like it was in 2008, to over $194 billion in only 5 years. Have a look at how parabolically the cash balance on Apple's balance sheet has risen between 2008 and 2015. Most people will know that when we had the global financial crisis in 2008, all of these big mega billion and trillion dollar companies benefited the most, okay? They benefited the most when we entered this era of easy monetary policy, okay? It's very simple. When the Fed jacks interest rates to zero and begins flooding the banks with QE reserves, it doesn't matter what you say, this is very bullish for stock markets. And, this low interest rate environment creates an environment where these big, large mega companies get access to super, super, super cheap debt. That is why we've seen so much stock buybacks in the 2010s, okay? Between 2010 and 2020 and even 2024. This has just been a 14-year trend where companies have absolutely gorged on cash. Now, I do agree with Austin. Cash is trash. And we're about to show you the numbers behind just how bad cash is in a moment. But let's continue explaining what's going on with Apple. Because we can see that despite them having an enormous amount of cash in 2015, they've kind of tapered their balance sheet a little bit over the past few years. Has Apple realized that holding cash is trash? I'm not so sure, but we're going to see. Right now, depending upon what estimates you use, Apple has around $100 billion in cash. Okay, around $100 billion in cash. Okay, so when we actually run the numbers, let's have a look at, what that cash does to a company's balance sheet. Okay, because here in this little tweet thread, I said, okay, let's run the numbers. Let's have a look at what inflation would do to Apple's purchasing power. Okay, so this chart here is one of my favorite charts. This chart is showing you the half-life of fiat currency. So it's showing you how many years is the fiat currency that you're holding going to lose half of its value. So we can see that it is different depending upon how many years you hold the currency. So if we have, for example, 5% inflation, the currency loses half of its purchasing power in 13.51 years. And in this Twitter thread, I said, let's assume that inflation is, let's say 10%. Again, most people say, but CPI is only 3%, Luke. You can't use 10% inflation. Well, most people would know that real inflation is a little bit higher than the CPI inflation that our governments admit to. Most people would agree on that. Even the Keynesian economists, which we will talk about later on because there's a pretty viral video going around about the Keynesians that I saw yesterday, and we're going to play for you guys. But again, everybody agrees inflation is a lot higher than 3. Let's pretend it's 10. You guys can run your own estimates on where you think inflation is. But if you assume inflation is 10% and Apple has a balance sheet of $100 billion, that means that Apple's $100 billion of cash loses half of its purchasing power within 9 years, okay? Which is absolutely incredible. Well, actually, it's not 9 years. It's 6.58 years, okay? Which is absolutely incredible. That is row number 11 on the chart that I'm showing you right now, which is absolutely incredible. Apple is sitting on one of the largest cash balances and cash reserves in the entire world, and they're going to lose its balance sheet is going to lose half of its purchasing power within 6 years, which is absolutely incredible when you think about it, okay? So again, what can Apple do to mitigate this problem? Is there an exit valve or a plan B for, Apple to actually get out of this? Well, we're going to be answering those questions in a moment. Let's have a look at the live chat. We have Denver Hoddle giving us a super chat. Cuck bucks incoming. Thank you, Denver. Really, really appreciate that, my friend. We appreciate the love. We appreciate the support. $3 cuck bucks. It's much appreciated. What is the half-life of $3 a cuck bucks when we use our inflation calculator? I'll let you guys do the maths at home. We also have another super chat from Austin. Austin, thank you so much, my man. Austin is a regular on the Bitcoin News channel and my personal YouTube channel, and so is Denver, actually. So again, you should check out everything they're doing. They're great Bitcoiners. Austin actually keeps our chat Bitcoin only and fights off the altcoiners in the chat for me. He's a Chad. So thank you for that, Austin. Really appreciate it. Now let's talk about what Apple can do. Let's talk about how they can actually get themselves out of this scenario where they are losing a lot of money, okay? They are losing, $10 billion a year if inflation's at 10%, roughly. Okay, again, rough numbers. You guys can see the exact numbers here. If you've got $100 billion, you hold it in, cash, fiat cash. If you assume inflation is around 10%, that means that money in 10 years' time is going to it's going to be worth a lot less, and it loses half of its purchasing power in 6.58 years. So let's talk about what Apple could potentially do to mitigate its situation. Well, something it could do is maybe it can replicate what another billion-dollar company has done to its balance sheet. Okay, before we start looking at what MicroStrategy has done to its balance sheet, let's just look at its stock price. MicroStrategy stock price is up by over 1,097% since 2020. Okay, so for those who don't know who MSTR is, I'm going to just show you the stock price. Okay, so MicroStrategy is a tech company, and they had a pretty, let's say, lackluster 20 years after the 2000 tech bubble crash. So this here is their chart. It is one of the most interesting charts in the world, really. When you look at this chart. MicroStrategy stock crashed 99% in the 2000 technology stock bubble crash. And it's essentially been going sideways for the past 20 years. Have a look at that. And then all of a sudden, MicroStrategy stock has gone bananas over the past few years. This year alone, MicroStrategy is up by 400%. And if we go back to our other chart, we can see that MicroStrategy it's up over 10x since 2020. So what did MicroStrategy do in 2020? Well, they said, you know what? This cash on our balance sheet, we don't want to hold it anymore. Because Michael Saylor actually called his $400 million on his balance sheet a melting ice cube. Now, most people watching this channel would know that he put all of his money into Bitcoin. Okay, and a lot of people might be saying, oh, but Bitcoin's too risky, it's too volatile. Well, is it? Because this billionaire, public company CEO, has held Bitcoin on the balance sheet of MicroStrategy for the past 4 years. So if Bitcoin really was this tulips mania, or if it was too volatile to be money, or if it was going to zero, wouldn't this company fail? Well, no. MicroStrategy has not failed. Its stock price has gone bananas, incredibly bananas, and they're printing money today. Absolutely printing money, and they've outperformed absolutely everything. So you can see this chart here compares Bitcoin and MicroStrategy to all of your other traditional investments. Since 2020, the S&P 500 is up 25%. The NASDAQ is up 17%. Bitcoin's right now up over 200% since 2020. And if we actually look at an even more recent and updated chart, which was updated on the 12th of April, we can see the Bitcoin's actually up 463% since 2020. Meanwhile, the S&P 500, NASDAQ, they're up by around 50%. Pretty good performance. Gold up by 16%. Bonds, the world's most safest and liquid currency there is in the entire world. Bonds, the neutral reserve asset of the world, the US Treasury bond, down 17% since over the past 4 years. So we're not cherry picking dates or data here. Like we're looking at 4.5, years of data. We're about 4 years of data here. And we can see very clearly what most people think of as tulips mania, Bitcoin. It's up by 460%. So again, maybe Michael Saylor's figured something out, but it's not just him. Yesterday, Jack Dorsey came out and they said, yeah, you know what? Our company Block is going to buy Bitcoin every month with 10% of its Bitcoin product profit. Okay, massive. We now get another $1 billion company DCAing into Bitcoin. Incredible. Absolutely incredible. And for those who may still be skeptical or not sold on Bitcoin, I'm going to play you a short snippet of this video here from Michael Saylor. He posted this video yesterday. The case for Bitcoin on corporate balance sheets. So I'm just going to play you a little snippet of it because I think it's a really interesting video. And right now, Michael Saylor is currently talking to literally thousands of public companies trying to orange pill them on Bitcoin. So let's listen to this short little video, and then we're going to get back into it.
Those companies to put Bitcoin on their balance sheet as a starting point.
You know, when I think of it, I start with Bitcoin miners. The public Bitcoin miners, the case for them is they should be issuing convertible debt and equity, and they should be buying Bitcoin because they are public, they are creditworthy counterparties, they can issue securities, and they would be raising money, equity, or cheap debt capital and investing in an asset which is going up, historically 40% a year or more. So that's very accretive for their business strategy. Their shareholders are already long Bitcoin. You have to believe Bitcoin is going up and not down to invest in a Bitcoin miner, right? There is no Bitcoin mining business model that works unless Bitcoin goes up in price. And if Bitcoin goes up in price more than 1% or 2% a year, then convertible debt is accretive and equity is accretive. So that's a fairly straightforward case, and fair value accounting makes it even easier, I think. I think the next class is Bitcoin exchanges and custodians. And for public ones, a Coinbase or whatever, well, and custody Bitcoin. And so for you to be buying Bitcoin quarterly and custodying Bitcoin, your own Bitcoin, sends a message to your customers that you actually believe it's a treasury asset.
So that point there, I just wanted to quickly interject, but that point about Bitcoin being, actually respected with the fair value accounting methodology, that's a very, very important one. It's a huge, huge thing that has happened in Bitcoin. I'm going to explain why in a moment. I want to first check out the chat because it's lively. Johnny Midas is here. He's late, but he's driving. I hope you have your seatbelt on this time, Johnny. Dan Bottle sent us another super chat. 5 Canadian cuck bucks. Let's spam the chat. Come on, brokies. Is that because Bitcoin's low? We're all broke. Let us know in the chat, Denver, so I know what you're talking about. And we do really appreciate it. Austin's on Ireland, literally the other side of the planet. What time is it where you guys are tuning in from today? I'm curious. It is 5:09 El Salvador time in Bitcoin country. That's the correct time. That should be the universal time, whatever time it is in El Salvador. But again, why is this significant about Bitcoin now being respected the way most other assets are with, fair value accounting methodology? Well, Michael Saylor came out in about 2022 or 2023, and he said Bitcoin can comfortably reach $5 million a coin if it has 3 things. The first being it has to be respected with fair value accounting. Okay, so that's the first thing. For those who don't know, this just enables a public company to put Bitcoin on the balance sheet and actually, get treated with quote unquote fair value accounting. Okay, so until 2024, until recently, until this year, if a company had Bitcoin on its balance sheet, it would be punished every time Bitcoin went down. The price of Bitcoin went down, company had to mark that loss on its balance sheet. But when Bitcoin went up, companies didn't get the benefit to say, oh, look, my Bitcoin's appreciated. Shouldn't this be accretive to my balance sheet? Shouldn't I be able to actually recognize a gain for my company? Oh, no. Bitcoin was not treated with fair value accounting until 2024. Okay, so that is a little bit of a primer on what it is. Again, I apologize if any of that's wrong. That was just pulled off the top of my head. So again, Michael Saylor said 3 things can push Bitcoin to $5 million. Fair value accounting, we have it. We have fair value accounting today in Bitcoin. A spot Bitcoin ETF. We also got a spot Bitcoin ETF in 2024. The balloons are on. I don't know why the balloons are firing, but they're firing. Okay. And the third thing, I believe, was actually banks custodying Bitcoin and banks allowing their customers to buy Bitcoin. We nearly have that. So I don't know if you guys saw this news or not, but earlier in the week, we actually saw Europe's second largest bank come out and say, yeah, you know what? We're interested in what Bitcoin is doing. You know what? We're actually very interested in what Bitcoin is doing. And they have actually been buying a little bit of BlackRock's ETF. Okay, so we can see here, I tweeted this one out earlier in the week. Europe's second largest bank, BNP Paribas, which has a $77 billion market cap, is quietly buying the BlackRock Bitcoin ETF. Now, again, if you look at the 3 biggest banks in Europe, Deutsche Bank, BNP, both of those are very interested in Bitcoin. Both of them are very, very, very interested in Bitcoin. Okay, so HSBC is the only one who isn't quite on the Bitcoin train yet. And I said, even the bankers are bullish on Bitcoin. We're winning. Everybody is coming to the realization that they need Bitcoin. Even Kenya came out this week, and Kenya's treasury and energy ministry is now working on a quote unquote national strategy for Bitcoin. Everybody is waking up to what is going on in Bitcoin and why they need Bitcoin, which is incredible to see. Okay, this is exactly what you really want to see, because a lot of people have said, okay, it's taken a long time for other companies and the big players to get interested in Bitcoin. But it looks as if we're finally getting a little bit of attention, which is great. Okay. And now that we're getting attention, let's ask ourselves how much Bitcoin we actually need. Okay. So if you missed it, I actually had the pleasure of interviewing Larry Lepard on the Bitcoin News channel this week. And we explored how much Bitcoin you need to become a millionaire on a Bitcoin standard. So if you missed that video, check it out. And with all that said, guys, thank you so much for everyone who tuned in. I think Apple is going to have to buy Bitcoin in the future. Again, that answers the question on the thumbnail. They have to if they want to continue out competing MicroStrategy. Dan Bottles sent us another $2 super chat. When lightning donations, come on YouTube, when lightning donations. Okay, thank you so much to everyone who tuned in. Thank you so much for the super chats. We really appreciate that. And we'll see you in a live stream tomorrow.